What is a capital event in real estate investing? Capital events are one of two ways that investors get paid in syndications. In this video, I'm going to walk you through how capital events work and how they actually turn out to be pretty big paydays. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about capital events. And I just put the three money signs right there because it's always a good day. Before we get into the good stuff, which is the money, we first have to understand how value is added in multifamily real estate, because this will make a whole lot more sense when we talk about the capital events, and there are two of them. So first of all, just to recap, and I've done a video on this before, just go up here and I'll put a link to a video I did explaining about the value add strategy in multifamily. But for now, we'll just do a quick summary. But if you are interested, check out that much more detailed, in-depth video. So generally speaking, in multifamily real estate, the value add strategy, we're basically taking an underperforming asset, boosting up NOI either through renovations or operational improvements. And we all know the value equals the NOI divided by the cap rate. And that gives us the value of the property. So if we're able to compress or lower the cap rate through improving the property and boost up the NOI, the value of the property is going to increase. Now, why does this matter when it comes to capital events? Well, the whole way we make money in real estate is increasing the value of the asset, so then we can either sell it at an increased price, at an increased valuation, or refinance, so put more debt on the property at an increased or higher valuation, so then we can pull out capital and hopefully return it to the investors and to some of the general partnership. And this is a good segue into capital events, because there are two. So the first way that investors get paid in a real estate deal is through cash flow. And I talked about this a couple weeks ago in a video I did explaining the difference between cash flow and capital events. So cash flow, I always call it like the cookie crumbs. As you hold the asset, you're going to get the little bit of payments. It keeps you satiated, but then you actually want the main event. You want the cake or the gingerbread house, whatever you want to eat. And this is what a capital event is. And there are two types in multifamily real estate. You're going to really find two types of capital events. You're going to come across a refinance, then you're going to come across a sale. Now let me explain the difference between the two and how it kind of plays into the big payday. So a refinance. So like I said, we've increased the value of the asset through doing our physical and operational improvements. So we've really driven up the NOI, we've increased rents, and we've compressed the cap rate. So we've taken maybe a B- property to a B plus by adding maybe some new amenities, taking care of deferred maintenance, adding some new amenities, making the property look a whole lot cleaner, improving it. So investors are willing to pay more for each dollar of NOI the property produces because it's a much more desirable asset, because we've gone up in terms of desirability in the class of the asset where the market is valuing it. Let me show you what I mean. So let's say, for instance, we have improved the NOI of a property by $100,000. So we've increased the NOI by $100,000. And let's assume we have a cap rate of 5%. So all we do is to find the value, the increased value, that how much we've improved the value of the property. We take $100,000, our increased NOI, divided by 5%, and that gives us an increased valuation of $2 million. So what do we do if we have increased the value of the property by $2 million? We have two options now. We can either put more debt on the property or we can sell it. If we think we can still hold the property and do some more to it and really ride up the market, maybe the market's really strong, we might want to look at refinancing the property. And what does this do? So let's say, for instance, we have $10 million of debt on the property, and now we have an extra $2 million worth of valuation. We can, let's say we're going to put an extra $1.5 million of debt on the property. What does this do? Well, the lender's giving us an extra $1.5 million. At this point, we can actually return it to the investors. So by refinancing and putting more debt on the property, we can return it to the investors. So the investors, the limited partnership in a syndication, I'll put a link right up here to a video I did explaining all about how syndications are put together, the general partnership and the limited partnership. So check that out. But with the refi, we're able to return that capital. And what does this do to investor returns? Well, it skyrockets investor returns because now they're getting maybe 30%, 20%, 40% of their initial capital back early. So it's a good payday for everybody involved. And of course, the limited partnership and general partnership are paid according to a split. And I did a video last week talking about waterfalls and hurdles, and I'll put a link right up here to that video just so you can learn a little bit more about splits and how they interact in a real estate transaction. So the refinance, we've improved the property, we've increased the valuation by $2 million. We've now refinanced the property, added more debt, and that allows us to return the capital invested to the limited partnership. Now with the sale, if we're not feeling the refinance, or maybe it's time to exit, we've already held the property for 4.5 years, and we've basically improved everything we want to improve according to our business plan, we can then sell. The sale process goes like this. The property is marketed, usually through a real estate broker. It's put under contract. The new buyer will do due diligence. They'll get financing put in place, and then we'll close. Once the property closes, we have all the proceeds of the sale. Now, if a lender was only going to give us maybe 70%, 75, 65% of our improved valuation on the sale, we can use 100% of it because we're all getting it back in cash. So instead of maybe getting $1.5 million with the refi, we're able to get that extra $500,000 out of it and get the full $2 million. Now, what happens at this point? Well, during the hold period, we've probably paid down the mortgage a little bit. We've improved the valuation, and with this example, I haven't even come up with what we purchased the property for. But let's say total, we're profiting $3 million on this deal. Well, that's $3 million of profit that's going to be divided or shared between the limited partnership and the general partnership based on the split. And I've done videos in the past talking about splits, so we won't even go into that. So going back to my cookie crumb analogy, the cash flow payments, your monthly or quarterly distributions that you get, whether it's 7, 8, 9, 10% a year, these are kind of like keeping you satiated. I'm a pretty hungry person, so I always need my snacks. This is like the snacks. And then the capital event, this is where you make the big bucks, because this is where you're basically being rewarded for all the hard work that's gone into improving the property, driving up that NOI, compressing that cap rate, and that's going to be giving you that much higher valuation. And you can definitely take advantage of that through your refi and through your sale. So I always call the capital events, the refis and the sales, it's like your cake. I'll put a couple candles here. You get a little bit of crumbs along the way, and then whenever your capital event comes along, you're getting a whole bunch of different slices. Maybe there's a couple different flavors of your cake too thrown in there. So if you're interested in investing in multifamily real estate, I've got a great quick start guide for you. Just go to multifamilyquickstart.com and download it for free, and it's going to walk you through the 5 key things you have to keep in mind as you get started investing in multifamily real estate. And if you are interested in learning more, meeting some new people, join my free Facebook group. I'll put a link right down below. It's a great group of people. And if you are an accredited investor and you're interested in learning more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think, and also let me know. Give me some suggestions for what you want to see in future videos. I always do appreciate it. So until next time, happy investing.